I'm Shae Russell for mining.com.au, and once again I bring the legendary Data Dan to your screens. I'm not beating you up or anything like this. Data Dan, welcome back. How are you?
Shae, I'm well. I'm beating the tariff drum this week, not because it's stupid policy, but basically because it's stupid policy, but it's being made to look legitimate by people who should know better. I'm talking about the general mainstream media, many of the politicians. You know, they've got very good data tools available to them, but this headline hugging is rather dumb, and the ASX dropped a whole bunch of market value for no good reason because uh, the traders many cases are just lazy, and they need to get off the Bloomberg terminal and actually look at the actual data numbers.
Oh, Dan, this might be my favorite chat of all time because our daily morning meetings with the team here at mining.com.au been pretty spicy as these headlines have been dropping in with tariffs. Let's talk about aluminium first. We've got a couple of separate subjects we want to go to around tariffs. The headline hugging, the not looking at the data. Let's talk about the impact of tariffs on aluminium and the foolish policy that this is from perhaps both sides.
So aluminium, there's two parts to it. There's the actual manufactured aluminium, which is about $300 or $400 million as the crow flies annually, and then there's aluminium ores. That's the stuff which gets extracted out of the ground. That's everything, you name it. It's about it's been on a bit of a tear. $12 billion in the last year. Now, to put some context around that, education, which is considered the third largest or fourth largest export in Australia, I don't know how, as the services one's around $22 billion. Aluminium's been very, very strong. The aluminium ore story, though, is when this number came out from the US, 25%, it would have been nice if the government of the day had gone to their own data tool and say, how much aluminium ores does Australia export to the world? Well, it's about 12 billion. 40% goes to the Middle East. All those fancy new cities they talk about building lines across the desert with, all sorts of oases and things like that. They're expensive, but the other thing too is you actually need materials which you can do it. You're not going to do it through steel. Aluminium is basically ferrous metals or any type of metals, not particularly free form. Aluminium is the closest you'll get in terms of its ability to, manipulate it and those types of things. So that's been quite interesting. So 40% goes to the United Arab Emirates, Bahrain, Oman, those things there. And China obviously takes a big lick, and so of course does Indonesia. The likes of India also take a fair bit, and Canada exports a lot more Aussie aluminium ores, a lot more than the United States. So you drill into a bit further. The average iron and steel sales to the United States are around 100 million. It's a big number, but it's not a massive number in terms of the country's overall trade. And so we're talking 1%ers, 2%ers here. And again, the US has actually a deficit of steel. They have a deficit of metals. They have a deficit of, and they've got a big rebuilding program currently. They've got bridges falling apart. So that economic boom people talk about is actually a country which is fixing up 100-year-old infrastructure, which is needed to do maybe in the 70s and 80s. So, one of those classic things, is it buying the rumor, selling the news? Well, this was basically sell on I don't know what I'm talking about. And again, it's disappointing because then the Prime Minister comes out and says, I'll do something about this. And the Trade Minister said, this is terrible times. BlueScope sensibly said, well, it's not really a huge impediment. Will weather the storm. Like enough to say, look, it's not ideal, but that was a business that clearly knows its market. The thing with aluminium in the built space is that what's being done with it. It's incredibly cool. Some of the housing and some of the buildings which are made, like free form and flowing pergolas, they're really cool things. But it's such a non-event, and it's such this hyper, reaction. And again, it reminds me very much of the first time Donald Trump was president in 2016. He would say these things, and the market would have a collective meltdown. And if they actually just took a step back and a breath, they'd be able to ride this out. I mean, but again, they don't, and it's again it's a new generation of traders coming in. They haven't learned much from the dopey ones they inherited it from. So there we are.
All right, so let's make this political just for a moment. Your article this week, Poor Analysis Leads to Political Paralysis. That is a really good way of framing it. But can you sort of explain to everybody why this poor analysis is leading to this political paralysis? Just because I don't think people are fully anticipating or understanding the damage that some of these tariffs will have on the economy or the US economy.
Well, they're going to have massive damage for the US economy. And tariffs, by their very nature, are inflationary. They're also counterproductive because what they tend to do is um, when tariffs are abolished, right, for example, you go away from moving away from how it's always been done. Right now, I use the example of, the local community uh, who does the same fair and show every year, and they use the same suppliers who are ripping them off blind because they choose not to go anywhere else. So then now you've got this thing where it's America first, America exceptionalism. So instead of looking for that nimble, innovative product that was created offshore that will reduce overheads and is good for business and good for shareholders, they're actually now going inwards. It's very much this kind of Monroe Doctrine thing. So that was this America first, don't get involved in anyone else's policies in the first part of the 20th century. The problem, of course, is with tariffs is you go to suppliers who aren't innovating. They're just going, they've got their set quota, their set way of doing things. They've got no incentive to actually innovate. And when you don't innovate, effectively all you're doing is you're betting in a cost line which keeps growing, 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 as opposed to looking away to innovating that cost line lower, lower, lower. I mean, the magic ingredient, again, price and product and how you can do both, maximize one and minimize the other. And tariffs, all they do is maximize an inefficiency. And that's why they're so bad, right? And so the US, for example, just to give you another one, they're importing lots of Australian meat. Why? Because they just don't have enough. So uh, we're talking about the great burger crisis of 2025. I mean, this is so stupid, but this is what, um, but this is what happens when you have people who react. If you've got policy being set via social media, then you know, that's a dreadful way of conducting anything. It's a case of being pragmatic and sensible and responding appropriately. And it doesn't necessarily mean going for, uh, this extreme way we're going to retaliate. I mean, Mexico and Canada have already got a stay of execution, according to the president. He may want to look very carefully at these statements. The United States is a net importer of gas from Canada and a lot of it, right? So the Republicans are enjoying a honeymoon at the moment, but they're basically championing policies they used to make jokes of when Ronald Reagan was leading the party in the 1980s.
And also, too, they're a net importer of gas in the US, and it's predominantly the East Coast that imports that gas, isn't it? So
Correct.
it's the business hubs of the US, like the engine drivers of the finance economy over there. They're the ones that are most going to be impacted by any gas shortage. Last time I checked, the US has some pretty brutal winters.
Brutal winters, again, you have to look at the proximity. Toronto and these places, they're not, it's not like it's a case of where you have to get on a flight and I'm off to Toronto. I'm tracking out. You drive there. That's like, I mean, these cities are quite close to each other. The distances we're talking. The East Coast, for example, has far greater population, is really the traditional United States. I mean, California, as the governor, the one-time governor used to say there, that is, a city which is actually, and that is a place which is actually a lot younger than the rest of the East Coast. So I struggle to see, and this is like how, for example, this idea of exceptionalism sounds very good, but at the end of the day, countries which are nimble and the world is far more interconnected than ever before. This type of rhetoric may have really played well in the 70s, but I think the United States, and certainly those people in the know, would know very well that the country is far more reliant on its overseas trading partners than ever before. So uh, all they're doing is pump priming an already very strong currency, and that's it only just makes Australian exports, for example, a hell of a lot cheaper. So they just neutralise any tariff by way of a currency fluctuation.
Well, I'm so glad you took the conversation there because we have two really sexy charts that we want to show people. And I'm saying we like I had anything to do with the creating of them. I had nothing. I just praised you. All right, let's look at the first one. And this is the comparison of the Australian dollar to exports to the US. Or value of merchandise exports to the US. Would have helped if I had it up in the background, but it was messing with my lighting. Dan, what is this telling us?
Well, basically, for want of a better description, exports to the United States, Australia, the US last year was Australia's fifth largest export destination in value. Okay, normally it's around $2 billion a month. We just don't sell any raw iron ore, coal, or anything to that part of the world. If we do, it's minute compared to what we sell into Asia, for example. So, it's things such as medical supplies, pharmaceutical drugs, uh, increasingly non-monetary gold. Now, the thing is, this will lead into our second chart, but the beef and the meat export has doubled in the space of a year. So that's actually, so driving up to about $3 billion of exports. And so the reason why it's so good for Australia is that these items we're talking about is you've got an exchange rate now, which is what anchored at 62, 63 US cents, right, to the dollar. Normally, and Glenn Stevens said the normal natural level should be around 75 cents for the Aussie. That was about 10 years ago, and that's kind of where people sit, in comfort. Like it's enough to make us competitive, but at the same time, enough where we can go overseas and enjoy Disneyland. But in December, this is where it's starting to get interesting because in the December quarter, we're seeing a market uplift in gold and the non-monetary form of gold. And last month, sales of gold, this is non-monetary gold, I might add, to the United States, normally $200 million a month. It lands at $1.2 billion for the month of December.
Huge.
It's a fourfold increase. When people look beyond the headlines, for example, there's opportunity for the space which Australia does very well in farm and quarry exports. It is not the excellence of our government's or domestic economy. It is our ability to sell material out of the ground or grow it out of the ground, and we're very good at it.
Houses and holes.
Houses and holes. And so, but the rest of it, well, more basically cows and, cows and rocks, that's really all it comes down to.
It doesn't have the same ring to it, but we'll work on that one for the next video. The falling value of our currency is actually good for our exporters. Like from an investment angle here, well, the headlines are losing their mind over what's happening. This is good for our exporters.
Absolutely, it's good for our exporters. I mean, like BHP, for example, or Rio Tinto, you name it, or CSL or any, their labour cost base is an AUD on, whatever their projects are. Every time you get a, a fall in the Aussie dollar, I mean, why wouldn't you enjoy the fact that your margin is actually being boosted artificially by, you get a reduction in cost based purely on the exchange rate and you haven't done a thing. So, like, that's why they made The Matrix and all those Star Wars movies here, because the Aussie dollar was 65 cents, and you may have been paying Natalie Portman how many $1 million in USD, but the fact is, it was very cheap to house Natalie out in Bondi and Hayden Christensen at Bondi than Beverly Hills. Smart move.
Certainly is. Now, Data Dan, I know you have places to be shortly. Before we wrap up today's conversation, we've got a hot CPI print from the US that's just dropped. But what other data is on your radar, maybe coming from the US and Australia over the next 7 days?
The jobs report, the Australian jobs report, not the US one, the Australian one. I think, we're getting in election mode now. The jobs report, if it's a bit weaker, that should basically firm the territory up for, in terms of what the central bank might do. Because in Australia, probably households probably do need relief now, and it's better to be a forward runner on that. So that's kind of what I'm looking at. There's so much to get through in the trade data, which has even dropped only this week. But there's so much to get through, and it's a fascinating story. And then, of course, it's really a case of whether the country, of course, can weather the storm and whether we start to see some, confidence start to flow back in. So there's a bit of kind of reporting season starting to come up. So I'm starting to look at some of the numbers around that and some of what people are doing. But that's kind of where is it like Australia is now slowly getting back into getting back to business. Like remember we shut down between November and the end of January, and I'd say the end of February.
Yeah, well, no work gets done before Australia Day.
But everyone's come back from Japan. It's time to get going again.
Yeah, it certainly is. That's where the currency favoured the holiday this year. Listen, Data Dan, once again, never enough time to cover all the topics that we want to cover. We're going to have to start looking at lengthening these conversations. Um, I look forward to our next chat. I'm going to hold you to that trade data. I think that'd be really exciting. Well, maybe I'm just outing myself as a giant nerd here. I think that'd be really exciting to go through together and to share some charts. Thank you so much for being here today. It was fabulous to have you on.
No worries. Cheers, Shae. Thank you.